I do want to talk to you, Sheila, here about the FDIC's deposit limits and about the decision by the government to basically guarantee the deposits, at least in these particular banks, above that limit, basically to whatever was there.
Right. So that was an extraordinary thing to do for banks that size. They said these banks were systemic. Silicon Valley is 200 billion, Signature is 100 billion. Those are not systemic banks, in my view. And I think by saying they were systemic, I think increased jitters didn't reduce them, though I know it was well intentioned and meant to be calming. So now the problem with these bailouts is, look, everybody knows there's a $250,000 limit. It's on the teller windows, it's on the websites. I mean, the FDIC requires disclosures everywhere. And the problem is now you do these one-offs. So we've got, Silicon Valley and Signature, their uninsured depositors were bailed out. Now First Republic is getting not a government bailout, but a bailout from the bank. So they're probably getting liquidity from the Fed to do that.
Yeah.
Who's next? You can't do these things on a one-off basis. If there's truly a problem with uninsured deposits running in the system, then they need to have a blanket guarantee. There's a process, a streamlined process to go to Congress and to provide that guarantee for all banks for uninsured deposits. Otherwise, you're going to create the ones that are not favored with this special status and protection are going to be in worse shape.
Yeah, and we know this is going to be a political football, particularly when you consider the types of depositors that were at SVB. When you're bailing out,
this is true,
when you're bailing out Peter Thiel and other folks who are already millionaires, if not billionaires, it certainly raises a lot of questions. But just to put a sort of a point on what you just said here, the Biden administration kind of made it clear, at least in their words, that a lot of this money wasn't going to be coming out of basically from the taxpayer, that this was maybe going to be coming from private banks here. Do you think that they can make good on that statement, that promise?
Well, they don't. For the ones they've already bailed out, yes. So when there's a systemic risk determination, there's a special process. Any losses from that systemic risk determination, which is giving the authority to the FDIC to cover all the uninsured deposits, those losses have to be covered with a special assessment that goes to all banks. So the irony is, yes, Peter Thiel's getting his bailout, but community banks, all banks of all sizes, pay into this special assessment. So, it's not a taxpayer thing. It's a bank thing, but that includes your community bank, and that'll probably increase your cost depending on how expensive this all gets. So, and again, the irony is that, these are the community banks. I was astonished to hear Secretary Yellen today basically say community banks are going to be out of luck, as I understood it. If you're not systemic, you're not going to get protected. That kind of puts a big target on the forehead of community banks, who, by the way, are still going to have to pay into this assessment to cover the uninsured deposits of the bigger ones that apparently the government now views as systemic.
Sheila, there's a lot to dig into here. And to your point that what we've seen from Signature, SVB, all the S-letter banks that we've seen so far, they weren't systemic. But when you think about if the regulators hadn't stepped in the way they did over the past weekend, the contagion fears, I mean, assuming that we hadn't seen that backstop come through, the point could be made that this week would have been a lot worse than it was.
Well, we still had contagion, we still had problems. I could also argue that by making this a systemic risk issue, they arguably made the problem worse. But I do think they should have followed the FDIC's normal procedures, which is what the FDIC had said it was going to do on Friday. Set up a bridge, put them in the bridge, pay the uninsured depositors an advanced dividend based on what they think will be their recoveries, always cover the insured deposits. We did over nearly 400 bank failures when I chaired the FDIC without a systemic risk determination. There are ways to handle these banks and give some cash flow to uninsured depositors. It's a process that worked during the crisis. It can work again. I do think by saying they were systemic, it implied a larger problem. But even just assuming arguendo that there was a larger deposit run problem, this was not the way to deal with it. You still have an issue. You can't do this one bank by one bank by one bank. If you need to guarantee uninsured deposits, do it for everybody. There's an accelerated process for congressional approval of such a program. That's what they should do.
Well, to your point, going bank by bank by bank, do you expect there to be any sort of blanket insurance given as we progress through this crisis?
Yeah. Well, we did something called a transaction account guarantee. It was a temporary program during the crisis. It provided unlimited coverage for transaction accounts. Those are the accounts where they're used by businesses and governments and institutions to make payroll, operational expenses. They typically have to go significantly above the 250,000 limit. We provided an unlimited guarantee temporarily. We did charge a special assessment on all banks, but it was a benefit that all banks got as well. And it worked. It stabilized the deposits because before that, we were seeing uninsured deposits fleeing community banks and going to the too big to fail institution. I am very worried that's what's going to happen again if they continue down this path. So that's what I think they should do. It's a temporary unlimited guarantee on transaction accounts. There's a streamlined process for congressional approval. And that would be if they want system stability to deal with a system-wide problem, if that's what they're seeing, that is the solution they should pursue.
Well, Sheila, well, then what's the solution? I mean, you were at the FDIC. I think you know the importance of these smaller banks, these community banks. I certainly grew up in a community where they were paramount. Right. It was the only way you were going to start a business here. But we've seen over the years this come down from whatever it was, over 10,000 or so a couple decades ago. I know we're below 5,000 as of today. And you mentioned Yellen's comments. I was just looking them up, and it was interesting. I mean, to basically say she's aware that a lot of this money is now flowing into the big systemically important banks, and they're not encouraging it, but they're not necessarily stopping it either. What's the future of these banks?
Well, these bailouts make the big banks get bigger. We propped them up during the crisis. There was at least one. They had 4 bailouts by my count. Should have been broken up, but it wasn't. But yeah, these bailouts make the big banks bigger and bigger. That's why if these one-off bailouts, that's why if you're going to do a bailout, I don't like bailouts. I don't want them to do a bailout. But if they feel they need to, then do it for everybody. Because if you single out the big guys, or now 100 billion and above, maybe it's a perception, you're going to really hurt the rest of them. It distorts the depositor decisions. It makes the deposits flow to those banks that depositors think will be protected by the government, and hurts those that are not in this favored bailout category. And you should see, the CEO of Silicon Valley Bank put out a statement saying, come put your money with us. Your money is, there's no safer place for uninsured deposits now because the government said we're going to be protected. What does that do to their? This bank was mismanaged, and it's benefiting now to the expense of smaller banks who don't have this special privilege that was given them by the government.
I'm just going to play devil's advocate here because there has been a conversation that maybe having a big bank system like some other countries, meaning where you have just a smaller number of banks, larger, of course, to be sure, that it makes it easier for regulators to police what's going on versus a system where we have here where it's much more disparate.
Yeah, well, that's the Canadian system. It's been very stable, but I would also argue it is not as innovative as the U.S. system, and it doesn't give their citizens enough options. I bank in a community bank. I don't want to lose that relationship. They know me. I can call them. I can get into somebody right away. I don't go through an endless, robocalling, voicemails, etc. So look, I think community banks are really important, especially for small business lending in small rural communities. I don't want to lose them. But, if that's what the regulators want to do, they want to kill off the community banks. And I think that's a pretty profound decision that maybe they should discuss with Congress. I don't think Congress would agree with that. In the meantime, there are tools that they have that they can provide a blanket guarantee for all uninsured deposits. And I think the problem here is fear, not so much banks insolvency. I think it is fear. The liquidity runs because uninsured depositors are jittery. So take care of that problem. And I don't think the program really cost anything because this isn't like we had during the subprime crisis when there was a lot of reckless lending and speculation.
Well, there's not reckless lending, but you know how quickly sentiment can shift. Are you worried about financial stability right now?
Well, I am for the psychological factor, sentiment, just as you said, the fear factor. Yeah, I am worried about it. And so, yes, which is why I think it needs to be very carefully managed. And you can't do this one by one by one. It's not realistic. It's going to really hurt the small banks. I would just wish they would go to Congress, get approval to provide a temporary guarantee for everybody, the way we did during the great financial crisis. I think that would be a much better stabilizing solution.